You're with The Capitalist Sage, a twice-a-month podcast that seeks out entrepreneurs and experts that speak to the real-world life of doing business for their sage advice. Now, with your hosts, Karl Barham and Rico FIgliolini.
Okay, hello everyone. Welcome to The Capitalist Sage podcast. We're broadcasting live on Facebook from Prototype Prime. I'm Karl Barham, and we're here to bring you advice and tips from seasoned pros and experts to help you improve your business. Joining me today is Rico FIgliolini with Mighty Rockets Digital Marketing and publisher of the Petrie Corner magazine. Hey, Rico.
Hey, Karl. Thanks for having me on with you.
Good, thanks. Today's guest is Laszlo, a CPA and owner and founder of Southern CFO Services, LLC. She has over 22 years of experience in progressive accounting, consulting, financial management. She focuses on helping small businesses now and their owners navigate their finances to gain better understanding of their businesses. Hi, Laura. How are you doing?
I'm doing wonderful. Thank you for having me today.
Thank you for joining us today. Well, I know in a couple of months there's tax seasons coming up, and we figured it'd be good to talk to some of our listeners about some of the impacts of 2008 tax law changes that went in effect to help start them with conversations they should be having with their accountants.
And yes, this year we've had tax changes every year since income taxes started, but this year there's so many that affect the majority of people. In the past, the changes have been very specific and only impacted estate taxes or this or that specific one. But this year, almost everybody will be impacted by one of these changes.
I noticed whenever everyone was talking about the tax law change, there was a lot of conversations about it. And then it went really quiet. Mm-hmm. And everyone went through 2018, and now the reckoning is coming.
Yes.
So why don't we start off by just telling us a little bit, the first thing you think business owners should be aware about changes that may be impacting them in this tax season?
Yep. So if you are a corporation, the corporate tax rate has changed in a good way. It is now a flat 21%. Now, that has had a lot of people thinking about whether I need to be an LLC with an S Corp or should I be a C Corp, and these are a lot of discussions that really need to be had. And right now for 2018, see how it works out for you and then find out if you need to be changing your corporate structure. And that's a big conversation to have between your accountant, your attorney, whoever else is involved in your business.
So is it too late to do that? So for this tax season, 2018 is over. Is this more helping them plan for next tax season?
Yeah, so this year will actually be a good year to see. Most of these should be beneficial for the C corporations, but for those of you that aren't, you can see it this year. It's not going to be a terrible hit to most people, but it'll be enough that you can make adjustments going forward. So, yeah, you really need to know how these are impacting you, and especially this corporate tax rate if your legal structure is a major part of your business, and to think about changing that it's a big deal that you really need to understand.
Is there any easy way to do a comparison for companies? I know, LLC is what I have. I think most small businesses have that, but I have no idea if a C Corp would save me any money.
So even with an LLC, you can be a corporation or you could be an S corporation.
Okay.
So you need to know, beyond are you an LLC, how is your tax designation as an LLC?
Okay.
So you have that state, I'm an LLC, I'm a corporation, but then the IRS has sub-designations that you could be if you're an LLC.
Okay.
So it even goes beyond that level.
So I know a lot of people are concerned about this concept of double taxation. When you're looking at these, what do I have to be concerned about? What would you advise people to help them minimize their taxes, or at least what things should they consider?
Yeah. So the C corporation does have the double taxation, and that's where we're talking about the flat rate went to the 21% this year. C corporations, you're going to have advantages if you have investments, if you can do stock options, you can do a lot of things that you can't do when you're a partnership or an LLC. So if you're a startup that wants to get angel investors and you want to get ready and maybe one day go public or get on an exchange, you really need to be that C corporation and pay that double taxation. If you're a startup, though, you're probably not making enough money to worry about how much tax you're paying, because if you're in that startup phase, you're spending every dollar you can improving your product or getting ready to go to market. So in there, the downside doesn't matter because you don't pay tax.
Got it. I know a lot of people, they try to figure out ways to minimize taxes in their business. Are there any things that change that people need to be aware of, that specific things that they were able to deduct that might have changed and impacted them this year?
Yes, so if you're not a C corporation, the news is not necessarily good this year. So entertainment expenses are completely gone. They used to be 50% deductible.
Right.
So I know my family were huge Atlanta United soccer fans, and so we have season tickets, and we would take clients every once in a while. And so I could write off the ticket that I took the client, and whatever food and entertainment we had along the way. It's all gone. So I can take the meal that I buy the client while we're there. But one great thing about Atlanta United, the food doesn't cost very much.
That's true.
Yeah, everyone likes that part.
Yeah,
But
so for 18, you can't take any entertainment expenses.
And if you're a C corporation,
It doesn't matter.
it doesn't matter.
Wow. That's big.
That is a big difference.
That's a big impact. I know a lot of small businesses, when they look at their marketing budget and how they wine and dine clients and so on, they separate a lot of expenses to cover that, and there's a tax advantage in the past. So now, if this is true, they may have to change how they spend their marketing dollars if they still want to be able to get the best tax advantage in that. And that's something that they need to start looking at, changing the behaviors this year, so they may not be impacting them as much next year.
Yeah. So if I host an event for my clients that gives them education about a tax law or teaches them how to get ready to sell their business in 3 or 4 years, the food and things that I bring to the meeting are deductible. But if I take them to a soccer game, it's not. So just changing up how you deal with your clients, and can you change this into an educational meeting rather than going to a sporting event?
Is that because that's more marketing? That's considered marketing versus
Yes.
entertainment?
It is a meeting where I'm giving training.
Okay.
And I can bring food in for a meeting that I'm giving training.
Got it.
So you're going to keep your season tickets?
Oh, I'm keeping them. They're personal now. Now, if a client does want to go, we will take
That, however, may open up seats for other people. That other people may give up their season tickets, and more of us might be able to get to enjoy them.
There is talk. I've got someone that helps do the sales for box seats. They have a little company that they do that, and it's changing their business because I'm not going to buy a box seat to anything if I can't write it off.
Isn't that funny how that works?
Yeah.
Wow. So what else besides entertainment then is there?
So entertainment's the big one that's gone.
Right.
You can still deduct meals and coffees out at the 50%. That may go away next year. So I have one client that's a grant writer. So instead of meeting everybody out for coffee, she picks up breakfast and takes it to the organization, and now it's a meeting expense.
Got it.
So it's just that is so funny how that has to work to be able to do it the right way, I guess.
Yep.
Is there, like, I know I also write off, there are expenses, right? So cell phone expense, internet, car expenses, any of that change, like mileage or repairs?
You
That's
still get
all?
to keep all of that.
Okay.
And one thing that we've been looking at more with some people, depending on their circumstances, owning the vehicle in the business name and then handling the gas and dealing with the repairs on the business makes the most sense. There's also a way you can give yourself an allowance if you own the vehicle yourself.
Right. Okay.
So there's 2 different ways you can do it. And it depends on, do you have a vehicle available for personal use? If you don't, then the business can't own your personal vehicle. So there's a lot of things there, and then what's a reasonable allowance?
So I noticed a lot of people, small business owners, it's shifting on what their space is that they work out of. They're working in co-working spaces, they're working out of their home, the gig economy. Any changes in the tax laws that might be impacting those types of folks, and what are some of the things they can do that might be able to help them take advantage of existing tax laws?
So the tax laws relating to those have stayed fairly stable for a while. The difference is the nature of our expenses, like you indicated. So you don't have a business phone and a personal cell phone. Back in the day, we used to carry around two. You have one now. Well, how much of your monthly data is really related to your business and how much is related to your personal? So if you can set up policies that say every employee that's in my business, which may just be the owners, gets $150 a month cell phone allowance. Then you don't have to spend the time to separate out how much is which, because honestly, to do that's very difficult.
Oh, it makes perfect sense.
So if you set up a policy, you keep it within some reasonable limits, and talk to your accountant about what's a reasonable limit for your industry and what you do.
Has anything changed with regard to home-based businesses, how they do their stuff?
Yeah, so again, those laws haven't changed, but how we work, it's so much different. So you can have a home allowance, a home office allowance. You can take parts of your insurance, your utilities, all of those.
Right.
But keep in mind there might be an impact if you sell your home, or you have to take some of that back.
So, but that hasn't changed really.
No.
That's the way it was before.
Yeah, but it might just be a deferral of tax until the house is sold. It might not be an elimination or a reduction of tax. It might just be a deferral. And deferral is not bad, but you need to know the difference.
Right. Yes, you got to be smart about it.
So another portion of the tax law, a lot of conversations. I work with a lot of business owners that are looking to sell their business, and there's this conversation around capital gains tax and so on. What are some things they can do to help manage? What's some of the laws that help impact people that are either selling their business and they want to minimize the tax implication of that transaction?
So one thing the IRS does do well is they see to the nature of what your gain actually is. So it's very difficult to actually hide it. So the impact you have when you sell your business on your taxes is going to be a side decision from how do I sell my business and get the most money.
Right.
So do make the business decision rather than the tax decision, but know what the impact is when you sell it. So I would not recommend anybody make a decision to sell their business based on what their capital gains tax is. Make your decision based on what you can sell this business for and the best way you can get it. We might be able to do a little bit of structuring to help defer some of that tax. But there's very few situations where making a tax decision makes you more money in the end.
Got it.
So let's sell it for the most we can sell it for. Get all your finances in order beforehand so that we can show the cash income shows up in the right places on the income statement. Then we can just know what the tax is and kind of build that into how you've structured the relation for the sale transaction.
Is there anything similar for business transaction, like when you sell a house, there's usually a certain amount of time where you can buy another house and you may not pay taxes on? Does that apply in business asset transactions as well, and what's that time frame?
It really depends on how you do structure it. So if you're selling assets, that's a different conversation than if you're selling a going concern, an entire business. So you really need to talk to your accountant about those. To give you some answers now would only apply to a specific situation.
Yep, absolutely. It's one of the things that I advise folks when they're looking at doing a deal. There's a group of people they need as advisors to help them with that, and I recommend have a conversation with your tax before you look at making any transaction. Talk with your lawyers, talk with your estate folks, and if you have a financial planner, understand some of the impacts on what your overall financial situation is, and so that's good advice.
Another situation could be you're trying to buy a business and you want to sell off some stocks or bonds that you have in the market. So you're going to have some gains on that, but then you're going to invest that money in a business which might have depreciable assets, so then you can take depreciation off. So yes, you have these capital gains here, but can you offset it with some of the depreciation in the business?
Oh, makes perfect sense. Perfect sense. One of the other areas a little bit different, maybe you could help with, is a lot of businesses out there do a lot of cash through their business, and when they're looking to sell their business, what advice would you do for folks that are doing that to help prepare their business to sale?
One of the things I would recommend is if you haven't captured everything through your income taxes, let's talk about how to get that in there. So one of the things I would really recommend is if you can anticipate a sale or an exit a couple years out, let's go through and reevaluate all your sources of income, get them in, pay the taxes on it, but then you can get credit for that when you try to sell the business. So, and if you haven't been doing that in the past and you're ready to sell, maybe we can go back 2 years, recreate some of the documentation and find enough to support the income that you had that was cash-based that may not have gotten into your taxes, refile those. Yes, you'll have to pay a penalty in taxes on it, but that might be worth the multiple you'll get on that income, because you're paying a % of that income in taxes, but it might return you multiples in your purchase or your sale price.
Why is it, do you feel like people don't know this information? This is good information for folks. So they're running their business every day. When you talk to clients and so on, why do you think they're not getting some of this?
I've noticed that most successful businesses that I've worked over the decades, they are good at what they do. So they are great scientists, they are great marketers, they are great salespeople, whatever their industry is, but they're not great accountants because that's not what they're good at. And you can't be great at everything. So if you're great at publishing and you're great at design, you don't know what you don't know. And if you don't realize you're not doing something the best way possible, you're not going to do it. So keeping in contact with your CPA, with your advisors that are helping you, and it doesn't cost much to call your accountant.
I got to also feel that the people that might be covering their cash, if you will, and not reporting it, they're probably thinking, well, when I sell my business, I could always say what I'm doing. It's not documented, and no one's gonna. If you're in a position where you want to buy a business, you're gonna pay $500,000, $1 million for it. You want to know that you can track that paperwork where it is, because you might not trust what someone tells you. That they've made $250,000 in cash, and for some reason they didn't report it. But you should believe me that I've done that over the last 2 years. So that makes sense, And
I think you've probably seen this with yours, Karl, where people are buying into businesses where they're not an expert in that industry already, and they don't know that a vendor has 15% cash that may or may not be on the books.
Right.
So if you're not in that industry, you don't have that trust that there really is this hidden money there.
Right.
So I would encourage, if you want to sell a business and you're in this, you want to open yourself up to buyers that are outside of the current industry. So if you want to sell your vending machine to another person in the vending machine industry, go for it. They know how this works. They understand what percent is going to be in what. But if you want to open it up to other buyers, let's get it on the books and take credit for it.
And that takes planning, right?
Yeah.
2 years out at least would make sense.
Absolutely.
Yeah.
So if I shift back a little bit to impacts of the tax law for 2018 this year, what else can people do to maximize the tax benefit that they can get in this year?
So right now you can still put money into IRAs and retirement accounts. They have changed some of the limits, so sometimes, depending on your situation, you can get more into it. And another thing to look to is if you're an owner with limited employees or employees that are family, you might want to do a SEP IRA, so you can deduct that on your business as an expense and get the benefit there, plus you've got retirement funds. So, that's a great way to go, too. And it's a SEP IRA, you can decide what you want to match or what you want to input. You don't have to match employees. You can just decide, I'm going to put 10% of everybody's salary into the IRA this year.
I'm glad you mentioned that. One of the things that I find owners of businesses struggle with, when they're ready to exit their business, all of their retirement is baked into that business, and they depend on it. And that might cause people to force themselves to believe that the value is higher than it is because it's the number they need versus a number in reality that they can get. Coupling that with whatever their investment and retirement strategy, just because they don't work for a corporation makes sense. But looking at that during this time of year is probably another good review they can sit on. And if they're not making those kind of contributions to those types of funds start doing that. There's a tax advantage to it, and then also it prepares them for life after their business.
And I think that it's a scary thing for people to think about. I don't know how to set up a 401k. I don't know if I can pay for that. And 401ks are expensive to set up, but you have other options. So talk to your financial planner. Talk to a banker's a good place to start too. They know everyone. Your accountant, they know how to get you access to these tools and vehicles that are a little bit cheaper and can give you all the benefits.
Got it. So I wonder if you could share with us, when you work with business owners and so on, what's the top thing that they just get wrong when it comes to tax season?
It's the timing.
Timing.
Another thing too, I know this is a little off topic, but for the business owners, this year especially, there's been a lot of ghost filers. So somebody will get a hold of your Social Security number, file a tax return just taking the standard deductions, and get the return sent to themselves.
Really?
If you get in after them, it's terrible to fix it. And it stays with you. And you might get to the point where you have to go file in person. I have one individual that every year he has to go down and file because if he can't do it electronically because he's been ghosted and somebody files for him. So he's completely blocked from filing electronically and has to file in person.
How rampant is that, though?
It really is out there.
Wow. Didn't know
So
that.
if you can get your personal return done, do it. Don't wait for the sake of waiting.
And, you must, every time you hear accountant friends and colleagues that I know, it gets really busy toward the end, and sometimes people are saying, April 10th, hey, I need to do my taxes.
Right.
What advice do you give to these folks as far as, what options do they have if they're that late in the season?
Yeah. So talk to your accountant beforehand and let them know you're going to be late, because accountants tend to be very schedule-oriented, and if we know you're going to be late, we can handle it. You're going to end up filing an extension probably, so know that you're going to have to do that. You might have to make a payment not knowing if it's exactly the right amount.
Right.
But
there's really no reason after February 1st to file late. You get all your paperwork by February 1st. I've got my 1099s from people and corporations and stuff. You really do want to start that February 1st and get it to your accountant as soon as possible.
No, absolutely.
Yeah.
And you need to get your business done before you can do your personal. And
Right.
you want to get that personal one done.
Yeah.
So, any advice for folks that try to do both themselves? What's some of the horror stories you see when folks show up and say, I try to do it myself, but something didn't work here.
Most of it's in the planning. So it's not that there was technical errors in their returns, because you use some software and it spits it out and it's accurate. However, you don't know what you don't know. So if you didn't realize you couldn't take a certain expense and you put it in the wrong number in the TurboTax, it's going to take your entertainment expense. Another thing, too, is maybe you didn't set up the retirement account, that if you talk to a CPA, they could advise you on how to do things in a way that help your tax situation.
I agree with you totally, wholeheartedly, because I have several businesses, and I used to do a TurboTax. But when you get to, I have several businesses and a rental property. So when you get to a certain point, you really do need advice, long-term, from an accountant to be able to do it the right way. Because you're right, the Turbo thing will spit it out correctly, but you're not going to maximize your savings.
Yeah.
And how do they play together?
Right. There's that too.
Well, we just approached the tip of the iceberg on this, and there's a lot more that we could chat about and discuss. But we're gonna end the conversation there. But I'd love to ask, so what do you have going on? Is tax season is busy? Anything that you have going on?
No. So everybody's starting to get their documentation in, and one thing I would like to advise people, when you're looking for a CPA and looking for someone that's got this advice, check it. Ask for their PTIN number. This is a number they have to file with the IRS to ensure that they've passed background checks, their licenses are up to date, and it's an easy way that you don't have to do a lot of research. So if they can give you a PTIN number,
And is it P10?
PTIN. So it's Prepared Tax Identification Number.
There you go.
Okay. So, yeah, that would be some strong advice that people don't know to ask a lot of times. So I would recommend that. And, yeah, give us a call. We can talk through a lot of things. We do free consultations. So, yeah, give us a call. And if we can help, we'd love to.
And what's your website? Or how can they reach you?
So I am at Southern CFO Services. We're on the Peachtree Corners Chamber website. And there's a link to our site there.
Peachtree Corners Business Association?
Yes.
Business Association.
Yes.
All right, cool.
Okay.
Great.
Well, I'd like to thank Laura for joining us today and giving us some great tips and advice. I recommend folks, if you want more information, reach out to Laura, reach out to your CPA, start wrestling with these issues and preparing yourself for the tax season. We'd also like to thank Prototype Prime for hosting today's Capitalist Sage podcast. And if you're starting a business or you're looking for a great environment to work in, we have a lot of places here in Tech Park that are outstanding. Prototype Prime for new startups, Atlanta Tech Park for accelerator businesses, and so we just love what's going on in this community, and we're glad to be providing some information to help our small business owners out there with their business. Rico, you've got anything coming up or?
No, the magazine, Peachtree Corners Magazine, just hit the mailboxes Monday.
And it looked fabulous. Great job.
Thank you. We're getting some good responses on it, so I feel really good about it. It hit 17,000 mailboxes by the end of this week anyway, it should. City's happy, everyone's happy. It seems there's always something in there that could be a little better. So we're going to try harder for issue 2. Yep. Issue 2 is going to be talking a little bit about home and real estate and commercial real estate. That's one of the feature stories we're going to have in that. Yeah. So we're going to be doing that, and social media marketing and with Mighty Rockets, and that's about it, really. There's always stuff I could talk about. I have other podcasts, but I find this podcast really invigorating because it has a lot of information, great guests, and this is only our 4th so far. Yeah, but you've planned out quite a few of them with some really good guests.
We have more guests coming at you, helping with great tips and just help you to improve your business. I can be reached, Karl Barham, with World Business Advisor. If you need any help in just a consultation and talk about strategies for your business, how to improve it, how you might plan for your exit, you can reach out to me both by email, kbarham@tworld.com, or phone number is 770-966-9855. Come out and chat with you. We talk a little bit about the best way to increase the value of your business, and we'll help connect you with professionals like Laura and others to help you wherever you need help. And Rico, thank you again.
Thank you. And I just want to say, feel free to share this Facebook live feed. And if you're finding it on YouTube, share it that way too. I want to thank Quinn Watch, a student at Paul Duke STEM High School, for helping us with the Facebook live stream. And I'm good.
Great job, Quinn. All right, thank you, everyone. Have a good day.
This has been the Capitalist Sage with Karl Barham and Rico FIgliolini, the twice-a-month podcast with entrepreneurs and business experts. We hope you enjoyed this episode. Want more? Visit our website at capitalistsagepodcast.com.